talk about the big boy Reliance, because that's seen a big value unlocking today. Of course, Reliance Industries is trading at around 2,618 rupees, but you also have the demerged entity, which is trading at 260 thereabouts, or at least a discovered price. It's not trading, it's a constant price, but it's at around 261 thereabouts, much higher than what Street was expecting. We have with us Mr. Jal Irani, the Executive Director, Nuvama Institutional Equities, joining us in the show to talk to us about Reliance. Hi, Mr. Irani, good afternoon. Thank you so much for making time and speaking with us. What's your sense with respect to Reliance going forward? Q1 is not expected to be the most bumper quarter for the company, but the stock is already sitting at record highs. How are you viewing the risk reward now?
Well, the Reliance stock sort of over the years tends to be a steady performer. And it's got many engines that it is firing on, in addition to at least one new engine, which is the new energy space. Barring the near-term speculation and volatility that has taken place on the back of the Jio Financial demerger, and which now is behind us, given that the two entities are trading separately, I would say it's business as usual, and I would think that steady performance for the stock should continue.
Make of this demerger, the value unlocked for Jio Financial Services, did you had a similar value pegged for that business?
No, we had a valuation of up to 180 rupees a share. It has exceeded that. It's one will have to see if the current stock price sustains. But really, the business that Reliance is really starting off a completely new business, and it's essentially very consumer facing. We similarly saw in the retail business that it took Reliance as much as 14-15 years to actually start making profits in this business. And here in this business as well, they're targeting the retail market, small businesses. Of course, the platform is going to be significantly different. They're banking on a digital transformation to reach out to 1.4 billion Indians, so to speak. But really, it's a very long haul business, and to attribute a premium to such a business so quickly is premature. If you recall, in fact, in the Jio digital business, for a very long time during the gestation period, the market was giving a significant discount on the invested value. So I would say that it's premature to give a significant premium to the stock price, to fundamental valuations at the moment.
Sure, get that point. Jal, many in the market are also ascribing a premium to Reliance because they believe that with this demerger now, it's also a sort of precursor to the very long impending the telecom arm and the retail demerger as well. Could that be next, or it's a little premature to think that it's going to follow anytime soon?
Well, to be honest, that's anybody's guess. That's something which is being talked about since a long time. But is it imminent? I'm not too sure. These businesses have certainly reached a degree of maturity. While to some extent they're still dependent on the cash flows of the O2C business, they're not entirely dependent anymore. So we'll have to wait and watch, but can't say whether that's imminent or not.
It's a bit surprising to me, and I'm curious to hear your views on that. They haven't gone ahead and demerged the mature businesses, telecom and retail, but they have managed to demerge financial services, which does not have any, standard business per se to talk about. Yesterday, they released, of course, the financials as well. Wasn't anything to command a market cap of 1.7 lakh crore rupees. Your sense why the company would have demerged the financial services business first and not the retail and telecom arm?
I think the financial services business requires a significant balance sheet size straight away, and to that extent, they by transferring the treasury shares of Reliance Industries to this business to give that critical mass to the balance sheet and hence kickstart this business was the strategy here, which they have sort of leveraged. So that's I think the unique strategy they followed for this.
I don't know, Jal, if you're authorized really to comment on this or not, but now with the demerged entity, how is it that you're pegging a target price in Reliance?
Well, we shall be relooking at our target price, but very simplistically, the intrinsic value which we had attributed towards the treasury shares is something that we shall strip out. Is simplistically what I can guide you at the moment.
And anything specific that you're watching out for from the earnings tomorrow?
So, overall, we think that the earnings are going to be flattish. But there are going to be many moving parts to that. And essentially, the largest of the moving parts is the refining business, where they had a record high refining margins the previous quarter, which has come off dramatically. Essentially any number over and above expectations in this largest business, which has been very volatile, would be could swing the numbers for the entire company in either direction. So that's something I would be watching out for.
Okay, Jal, great to have you on the show. Thank you so much for taking the time out and speaking with us.